Tesla may have been around for not far off 2 decades now as an EV company from the inception, which is significantly longer than any other EV company around today. It's taken Tesla a very long time and a lot of hard work to get where they are today. They initially have had to wait for battery prices to come down until finally lithium-ion laptop batteries were of sufficient enough density to make a car with a reasonably adequate range, albeit at a very high price tag, the original Tesla Roadster. From there, Tesla took the process in their own hands and partnered with Panasonic to create an even better battery that can be used for a more affordable car in the luxury sedan market, and with even better range again, the 18650 battery for the Model S and X. This partnership evolved and eventually came the first gigafactory that produced the 2170 battery that is still used to this day in the Model 3 and Model Y, but this was still in association with Panasonic. Tesla was not a battery manufacturing company. They needed to work with someone who knew a lot about batteries, or else there could be dire consequences such as fires, but also the likes of battery degradation too, and Tesla learned everything they could about battery manufacturing as a result. Over these years, along with sufficient R&D and various acquisitions, Tesla finally designed a battery that would be ideal for electric cars, removing the element cobalt, which creates all sorts of economic disadvantages, and designed around manufacturing techniques that meant the production was actually scalable to eventually produce the tens of millions of cars that are planned. Along with reducing costs to not far off 1/3 of what Tesla pay today for 2170 batteries, and of course being much more energy dense and combined with other genius aspects such as structural battery packs, thus further reducing weight. And that's where we are today, still at the inception of Tesla's new batteries. In fact, not quite even there yet. Next quarter we're told we'll finally see Tesla's cars in production with 4680 batteries, most likely at Texas with batteries coming from Cato Road in Fremont, although we are also hearing the possibility that PepsiCo will take delivery of the first semi-trucks this quarter, which would therefore be the first vehicle sold with 4680 batteries. Hence the title of this video, that Tesla has barely even gotten started. Aside from the fact Tesla's run rate is about 5% of what is targeted for the end of the decade, and their energy business is far from less proportional to that again, probably closer to 0.1%, well, I'm talking about their core product not even being sold in their current vehicles yet, let alone anything close to being ramped up to volumes that we're being told, with potentially 250 gigawatt hours a year just from Berlin factory alone. Sure, the 4680 batteries may not be as exciting to talk about as the almighty Cybertruck, but as a Tesla shareholder, these batteries will make you a lot more money on your investment than the Cybertruck. I think it's important to get our heads around this, that these batteries are going to cost so much less to produce that it could add 10% more onto gross margin, which in turn would go straight onto operating margin. Along with other efficiencies, cost savings and price increases, operating margin could reach an astounding 30%. Yes, these numbers sound unbelievable, but I'm not making them up. It's very easy arithmetic, but like I said, hard to believe. A lot of people really can't grasp this potential, and who will keep reminding us how Tesla is so overvalued, like how they reminded us how expensive the stock had gotten when it hit $400, then $600, or $1,000. And I'm sure they will take pleasure in informing us how overvalued the stock is when we're at $3,000 too. But the chances are these naysayers have not done the in-depth research like you and me. They probably haven't even been watching much Tesla Economist either. They probably just saw some headlines or did some quick math on the number of cars Tesla does sell, or their latest earnings relative to the $1 trillion market cap. There is much more than meets the eye with Tesla, and so much of it comes down to the batteries. The batteries will create this additional margin, and these batteries have been designed in a way that they can be manufactured at such fast speeds in such a small footprint. And like I'm trying to explain, Tesla haven't even released them in their cars yet, hence how we haven't even started. Once these get underway, then Tesla is finally on track to become the company it can be. I repeat, 4680 batteries mean a massive increase in ramping up batteries. Batteries still being the overall most supply constraining issue. Chips sound like they will be sorted, but ramping up batteries is something no one else can do, or at least nothing close to this scale. And then the cost of these batteries, what it will do for margins. Then we can finally watch this company grow, and it's going to be happening next year, which is why I've been attempting to grab so many leaps to cover this time period, as once everyone else sees it can finally be achieved, well, that's when the stock price may hit escape velocity. Of course, Tesla have these new factories to absorb this additional increase in batteries, with a target, I believe we had last heard, of reaching a run rate of 100 gigawatt hours by the end of 2022. But despite all this extra ramping and obviously massive increases in actual products, don't get too excited for any dividends anytime soon. Investing in this company is a marathon. If you want to sprint, then go look at trading some crypto, as the next thing to wait for will be Tesla's in-house LFP batteries, which is the announcement I am most excited about. As an investor, I'm much more looking forward to hearing about the specification on Tesla's LFP batteries than compared to, say, the Compact. As a customer and Tesla brand enthusiast, sure, the Compact model is more exciting, and as an investor, it obviously is still exciting too, but when you're looking at the returns that you might expect on your stock, then it's all about these LFP batteries. Just about the entire company is about these batteries. No joke. Elon says about 70% or so of vehicles will use these batteries. I think it's going to be closer to over 80%, to be honest, as that compact Tesla will use them, and it will sell beyond any car we've ever witnessed. But that's the vehicle side of things. Remember that energy business too? That's meant to be at least as big as the transport business? Well, these LFP batteries are the batteries that are going to be deployed in Tesla's battery storage, megapacks, and eventually Powerwalls too. I assure you that in the next few years, these batteries are the biggest deal, even more than FSD or robotaxis. You can't have a $25,000 Tesla without them. And being LFP and Tesla's LFP, then these batteries will handle probably 2 million miles before degradation becomes noticeable. Oh yes, the million-mile battery. That was the news that the market was expecting for Battery Day, hoping to hear that the million-mile battery will be reached. But there was actually no mention of it at all, hence the stock price going down. But reading between the lines, it was all there. That's with nickel-based batteries too. Well, if Tesla produce iron-based LFP batteries, then surely they'll hit 2 million miles. Iron-based batteries do not degrade anywhere near as fast as nickel. Imagine that. Cars that will literally go for millions of miles, perhaps with some refreshed interior from time to time. Bear in mind the fact that Tesla can manufacture these batteries at such low cost and have so much more margin in their vehicles than any of the so-called competition, in turn means Tesla can pay more for lithium or nickel, as it's worth so much more to them. Except they don't probably need to because they secured all their supply chains. So yeah, you may feel the stock price has run away from you and you missed out on Tesla, now it's $1 trillion company, or didn't fully build your position in time. On the other hand, it's not even the biggest company in the world yet. And like I said, we're at a run rate of 5% of what is planned on selling by the end of the decade. And if you think we've barely gotten started for the auto business, then like I was saying, the energy business is so much further behind. We get distracted with everything else, well, mainly cars, as that is Tesla's core business currently, at least 90% or so of revenue, so it's what we focus on the most. But eventually these batteries will be in such high production, the vehicles will no longer be supply constrained, and Tesla can finally start ramping up the energy business. Everything is early, it will be so much more of a company, even by 2025. Just in the next 2 years alone, we're told to expect 3 times as many superchargers. 3 times over 2 years. That is huge. But think about where we'll be in 2030. How many superchargers, how many batteries, how many different models on offer? It is possible that over this time we may have to endure a recession due to various macro events that may unfold, but these will likely be temporary and it will find its way out. In fact, it might be Tesla that gets us out of the recession, similar to how the smartphones industry came out of the GFC. We're still early in the game, but this industry takes a very, very, very long time to scale up, as Tesla has shown. And even if you throw money at it, and it doesn't make any difference. Tesla can easily obtain more money than all the other auto companies combined. And if it made a difference to getting where they want any faster, then Tesla would raise the money. But they aren't. They are not capital constrained. Yet the legacy autos will convince you, well, not possibly you, but namely their stockholders, that actually that's not true. You can throw money at this problem and make things happen faster. That's why they're going to borrow $30 to $50 billion to leapfrog the whole process. Unlike Tesla, who are so obtuse, they don't just borrow some more money or float some more shares and throw even $100 or $200 billion at the problem, build more factories and mines, and then they could produce that many more cars that much faster. No, this is not the case. It's one of those things you cannot throw money at. There are certain bottlenecks that take time, but in particular, the batteries. And Tesla's 4680 batteries can likely be produced at a rate of about 10 times the speed of the 2170 batteries, and in the space of 1/10 the footprint too. No other EV company has these batteries or can produce them, or even if the patents were open, well, these production lines sound very hard to set up. I simply don't think the competition could reach the same levels of Tesla, and definitely not at the same production rate. The same is true for producing EVs. No one else has reached volume production, and let alone at a profit, and let alone making computer cars rather than just electric cars. So you may feel like you missed out on Tesla or didn't buy on the dip. Well, bear in mind, it's still early days, and try and picture yourself in 2025, what the future will be like then, how many Teslas will be on the road, how many people will have Powerwalls, will there be robo-taxis? Then try and imagine what the stock price just might be, and then look back at how cheap it is today. Everything is relative. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.